Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Monday, and it feels a little bit longer than a Monday. Anyway, came in today. Futures were up like 10 handles. Overseas markets were, blast off mode. The DAX, I can't even believe how much that thing's up in the past few weeks, months, since October. But it's really ripping the heads off of some shorts that are just trying to short it blindly, saying it can't go up anymore. And that trend's been strong, and the trend in Europe's been real strong. Then Asia broke out also, joining the party, and that boosted us, and we wound up having a gap and go. I came in today flat, wasn't sure the way the action's been. Unfortunately, I feel like I've been writing a little bit better than I've been trading myself, and let's just get down to some charts. When we broke the 8 and 21 day right around 2100, I was like, you know what? We probably test the mid-end of the range, 2040 to 2060, which is a level that I put out on the charts and a level that I thought in my head I'd be able to buy, and actually just didn't really do that good of a job with it. I got in on this gap and go day right there. That was a nice spot. I was like, okay, we crossed above this 2050, bought the dip that whole day, took out some decent longs on Thursday into Friday, and then Friday looked as if we were going to break this moving average, that it was another trap type of move, and then we came up at the end of the day, and then boom, held and went today. So what does that mean? It doesn't mean we're going to be at new highs tomorrow, but it means that if you were short here or short there, hopefully you covered a little bit into this zone, because you now have a pivot. So you went from the low end to the high end, relatively normal type of pull-in. So now we'll see, I guess, what happens tomorrow. Does it come in and do a shake and bake type day and hold higher? Does it give you an inside day, or do we get a little bit of follow through? And then right here is another resistance where we broke down from, which comes in a little bit closer to 2087. So, if you want to figure out, who's on the Bulls team, the Bears team, et cetera, or why, in my head I think, the highs aren't in for the S&P. It's just a matter of when and how it happens. You look at the IBB. IBBs have been very strong, made new highs. So right there, kind of showing you an appetite for risk, holding the 8-day the entire time. So that tells me, at some point, I don't know if it's this week, I'm hoping it's this week, that the IWM, that that held above the 50-day, which the S&P's hit, gave a decent gap, that shook the tree a little bit in here, definitely did that, is right back to highs. So with a little inside action, I would think that this makes new highs, and again, this is showing some alpha so far this year. You go to the weekly chart. I put it in my 2015 thesis for alpha, was just because the size of this channel, big channel. You look here, all in all, it's holding this prior breakout, so it's still strong. On the weekly, still above the 8-day. It does look like it can continue. So that's that. Another, I think, bullish sign is the XLF. XLF, go to the daily chart. It's trying to clear this spot. Here was after the stress test, a pretty nice wide range bar, but did kind of the same thing as most other sectors came in. This actually held the gap. Was strong enough to do so, and now it pushed above this prior area. So that's a bullish sign. FAS, if you want a little bit more juice, that's also looking pretty good. You look at something like, within this group, Goldman Sachs already back at this upper area. I actually tried to work into Morgan Stanley today. I have not had a lot of luck with this chart or trade this year, but at this point, you have an inside range of 3 days. I know that at some point I probably would be looking to buy this if the market continues to be strong. So I have a little bit of a feeler on, so this way I can watch it and make sure I'm there for if this does get a little bit better. Bank of America is still lethargic and below all the moving averages, so it's, I'm not even looking at that yet. As far as high beta tech, Google had turned up today, played with the 200-day. Very streaky. I guess if you took the streak this way, when it took back the 200-day, you had some nice follow through. Then you had this little engulfing day right here, which could have got you out of the trade, signaling some kind of correction. The question was, where would it go? Would it hold the top third? Would it hold the 8-day, the 21-day, whatever? Came in all the way to here, and you know, I'm not really a full Google fan as far as even the company, but here, you know, inside range, and we'll see what happens if it can continue. If, you know, rally, pull back, continuation, you shall see. Very choppy overall. Amazon acting better or hanging in there. It broke, you know, the 8-day moving average right here, gave you 4 down days, and now at least you have this area to trade against, hanging in there. Again, not showing full leadership, but it's doing better than its friend Netflix. Netflix, you know, this chart could tell you a lot and how to navigate things. This was your gap after earnings, your 4-day move, continuation, still holding the 8-day moving average, still trending. And then what happened here, guys? It broke the 8-day moving average, got weaker. That means this trend kind of changed. And if you want to draw a trend from right around here too, from when it gap up on earnings as an active trader, you know, broke below it, stayed on the right side of it, and then continued lower. I think off the charts had as a short around 470. So anyway, you look here on this day, which was Friday, closed near the lows when the market didn't, near this range. So some people probably were short, and if you were shorted, congratulations. You know, it was the right thing to do, continuing below the moving averages week, and you had a downgrade, so you got paid. So now, what is Netflix? It's still, I think, it's just a two-way trade. We'll see what happens here. You have this low, which was 417 to trade against. Maybe, you know, goes sideways, tries to fill this gap. But at this point, I wouldn't be overly infatuated with it because it's kind of broken from a momentum level. It did hold near the gap, but might not be anything compelling for a little bit. Today, BABA woke up a little bit, but still has the lockup on Wednesday. Sperling caught this trade pretty fast. Looks very similar to this. You know, here was the downtrend that it created. Remember this? You know, this was your awesome trade when it took out the IPO high, when it broke above 92.50 before the red dog reversal right there. Last time I was really focused on it was right around here when it looked as if it was going to break this downtrend, and I was thinking you can get a nice new trend, juicy trade above this, blah, 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 and it failed. So that kind of got me out of it, and I don't take it in earnings anyway, and I lost some money in options. And now here we are again from a lower level. So the question is, does this downtrend break to the upside? Is this going to be, you know, I remember way back when with Twitter and Facebook, when Facebook lockup expired, everyone thought it was going to get crushed, and it didn't get sold in the first few minutes, and it had a big-time short squeeze. So, but Twitter was sold on the lockup, so you don't know. So at this point, you know, you go back to the chart of BABA. It looked as if here, you know, there was a good enough day that perhaps it could change the complexion. You had 2 inside days before failing. So now here we are again. Not the most powerful day, but see if it, you know, holds in there. I'd maybe go to your 5-minute chart and see where it held. I think it held like 83.50 because Sperling was talking about buying the pull-in. So I would say if this is any good, or if they want to make it easy, support 1, support 2, anything below this, and I would think, you know, again, a little one-day wonder. I mean, some people are saying that the market doesn't have any memory day in and day out, so, you know, then that'll be the case. But at this point, it's worth a look. Same thing, you know, Tesla, we talked about the gap and go. Stock's been broken. It's been, you know, battered and bruised in a downtrend, and guys are making a lot of money probably shorting the rallies, maybe adding on breakdowns. But today, with the tweet from Musk, it was up $3. I think a lot of people were playing it to break this 185 and got a little caught, and it closed near the highs. And does it mean it's going back to the highs? Does it mean it's a, you know, momentum's back? Yay. It means that from an active trading perspective, you've had a few of these moves that were short-lived. This looks like it could try and go a little bit more. It could maybe test, you know, this area before all the people that try and short rallies come in. And who knows, maybe at one point it takes it out. You know, maybe it takes this one out and then tests the 204. If it gets through there, then you have the bigger one, which comes in a little closer to 212. We'll see what the news is on Thursday. I think it's about interchangeable batteries, which has been a potential problem. So anyway, that's that. Then you go to social media. You know, today I remember thinking to myself, I'm like, what happened to Twitter when Twitter traded into its gap? Because a lot of people were shorting it into the gap. And in Twitter, it actually created a red dog reversal. If you look here, it looked as if, you know, it's going to fill the gap. Buyers are out of the way. Short. It's going to head lower. So what you knew that coming into that day is 45.79 was the prior low, and it created a red dog reversal. So maybe you made a cute money short or some money long, and here we are in this range still, kind of lethargic, but nice moves to start the year, digesting still. So when I got short LinkedIn today, I had that in the back of my head that could happen. So anyway, it was a little weaker off the bat. I think it was up $1 or so. I think some of us shorted it around 459, added a 458, covered some into 457s, and then once I reclaimed this, I just got out of it because I don't like being short anyway. Here was a fake out, fake breakout, a little bit of a fake breakdown. Still not showing you too much. Facebook, I did get long today, and it showed relative weakness, and this stock is just a very, very hard to trade stock. This channel goes it's very long and wide. Every now and then you do get some momentum trades, like this was a decent one, and then here it looked as if it was going to break out above this area and finally give you a clean trade, which we were excited for, and then it got a little red dog reversal right there before coming back. So down here, I went long a little early, burst the lows, and thank goodness I didn't get stopped out, so I held it. So it's worth something maybe. Held the prior breakout. It's not a great acting stock, but I'm in some. We'll see what happens. What else? I think some people bought CYBR on the dip today. Nice little, bottom tail. Sperling was talking about it, and reversed, closed on the highs. Maybe that's the pivot to continue. Stock had an awesome move, right, from 37 to 70. So it pulled into retest. Look at this. This is pretty symmetrical, right? It pulled into retest right into here, and decent spot to either cover your short or maybe even get long. We'll see what happens tomorrow. FEYE kind of hanging where it has to also. Big move to start the year from above this area on earnings, and now it's been going sideways, came in. Looks as if at some point it could wake up again, so keep it on the radar. Oil broke lows. Oil, we talked about the range breaking last Tuesday. It was the first time you had to close below this range. We were watching this range pretty closely, which was right around 18. And then right here it had its first close below it. So at least it told you that it was vulnerable to want to come back and retest the low here, that there's a bit of a void. And, wound up doing it. And now what to do here? I don't know. Some think it kind of took out some stops in this area and might try and give you an oversold bounce. That's maybe. If you covered some shorts here, if you were short from here, it's always not a bad idea on 6-year lows to cover. Do I think it's a long down here? I don't know. I just know, same my other rules. 1, 2, 3, 4, 5 down days. I'd rather see you cover versus press. Doesn't mean, it's a full-fledged buy. And that's the kind of rules that keep me somewhat safe. The XLE had an update today with oil down, so some guys got long it, thinking that maybe you get a cute bounce, and you did take out a prior high. This is a little bit more engulfing than you've seen in the past 4 sessions, so maybe it does continue a little bit, up to the 77 area where it broke down from. But we've seen these before, and this could be just your active trade, and then you got to always see if there's more, depending on your time frame. Below every moving average, there's been some moves, but nothing's been really truly sustained. At this point, it's still in a downtrend, and one green day with oil lower, maybe it's giving you some kind of divergent clues that you can get another. So if you're in it for that, try it. That's fine. Let's see, the TLTs. It's still, this little island bottom down here is still ruling the roost short term. Here is that support that it gapped below, then gapped back above and created this island bottom. And if you sold it when it broke the trend here of the 8-day, when it closed below, or even the 21-day, perhaps you nibbled back in here. I don't know. You still have a little trend line like this, and perhaps it could continue back to at least retest here. The Fed is far away still. It's on Wednesday, so it could do whatever it wants between now and Wednesday. So if you're in it and you're trading it actively, it held the gap. Looks like it could push through here, and this would be the next spot, and we'll evaluate it there, and we'll see where we are come Fed Day. And with all that said, it's Monday. If you missed today's rally, it happens. If you came in short, hopefully you didn't fight it all day, or you traded out of it somewhat. Tech was weak in the morning, and it did get a little bit better. Oh, real quick, Apple. I don't know. Apple's interesting right here. I made actually a little money short it, and then it held, and in the afternoon I got long, probably a little too, closer to the end of the day. You could say that this is, a basic descending little channel here. We've seen it before. Sometimes it lasts a hell of a lot, long time, and I figured I might be buying this thing above 125.40, so I might as well be in a little bit now, because if it starts to go and that was the corrective phase, I want to be in some. I personally think the watch is going to be a huge success, but that's me. This Red Dog reversal from last Thursday still never made a new low, so some people are in from there, and we'll see what happens. It's not leading the market, but today in the afternoon it acted a little bit better, so we'll see if there's a little follow through tomorrow. Lately it's been one day red, one day green, and choppy, and not the most clean-cut trade, so we'll see if that changes. And that is your recap. See you tomorrow morning with Brittany. Have a good night.